Everyone keeps asking the same question right now. Is Vancouver in a buyer's market or a seller's market? And the problem is that's actually the wrong question to be asking. Because right now, you can literally drive 5 minutes across Vancouver and move from a strong seller's market to a full-blown buyer's market. For example, downtown condos are sitting on the market longer than many sellers expected. Meanwhile, renovated character homes in Mount Pleasant are still attracting strong interest from families and even going into multiple offers. Detached homes in Kitsilano are behaving completely different than detached homes in Killarney. Fairview is telling one story, while other parts of East Vancouver are telling another. And that's exactly why so many buyers and sellers are confused right now. The headlines make it sound like Vancouver's one giant market moving in one direction, but that's not what's happening at all. In reality, Vancouver has become a collection of dozens of smaller micro markets, all moving at different speeds and responding differently to interest rates, inventory levels, affordability changes, and buyer demand. Today, I want to show you exactly what's happening across the Vancouver market right now, where buyers have leverage, where sellers still hold the cards, and why the most important question you should be asking in 2026 isn't whether Vancouver is a buyer's market or a seller's market. It's where do you want to buy? Because the answer to that changes everything. Let's start with the overall numbers because they provide an important context here. In May 2026, Metro Vancouver recorded 2,151 home sales. That's down 3.5% compared to May of last year and nearly 27% below the 10-year average. At the same time, there are nearly 17,000 active listings available across Metro Vancouver, which is roughly 35% higher than the long-term average. Buyers today have significantly more choice than they've had in years. And when most people hear those stats, they immediately assume the market is weak. And to some extent, compared to the frenzy we saw during the pandemic years, it certainly is slower. But what's fascinating is what happens when you dig beneath those headline numbers. Detached homes sales actually increased year over year. Attached homes remained relatively stable. The biggest weakness came from the apartment market, where sales declined more than 7% compared to last year. And the distinction matters because it tells us that buyers aren't just disappearing. They are simply becoming more selective. People still want homes. Families still need more space. People are still relocating for work. Life continues moving forward. What's changed is buyers now have more options, which means they are willing to wait longer and be more patient before making decisions. This massive influx of active listings isn't just a sign of panic selling. Rather, it represents a healthy rebalancing of a historically suffocating market. For years, buyers were forced into high-pressure bidding wars, often waiving critical subjects just to secure a property. Today's inventory levels offer much-needed breathing room, allowing buyers to conduct thorough due diligence, schedule property inspections, and negotiate fair terms. The divergence between housing types also highlights a highly strategic consumer base. The slump in the condo sector suggests that first-time homebuyers and investors, the demographics most sensitive to stubborn interest rates, are pausing to recalculate their budgets. Meanwhile, the resilience in the detached segment proves that upgrade buyers, backed by existing equity, are actively capitalizing on increased selection to find their forever homes. Ultimately, Metro Vancouver is transitioning away from an era of frantic urgency towards a period of market maturation. Sellers must now adapt by focusing on realistic pricing and presentation rather than relying on market momentum. As borrowing costs stabilize, this healthy buffer of inventory will likely prevent the rapid, volatile price spikes of the past, paving way for a more sustainable and balanced real estate ecosystem. For years, Vancouver real estate was driven by one dominant factor: a lack of inventory. Every decent property seemed to attract multiple offers, and buyers felt pressure to act immediately. People waived conditions. Some buyers were making offers after seeing properties for only a few minutes because they were terrified of missing out. That environment created a mentality where many buyers felt they had no control. If they wanted a home, they had to move quickly. And today's market looks completely different. Inventory levels are much healthier. Buyers can compare properties and circle back. They can negotiate. They can walk away if the deal doesn't make sense. And because of that shift, the market has become much more localized. Today, broad market statistics matter less than they did a few years ago. What matters now is the neighborhood you are targeting and the specific type of property you're buying. This fragmentation means macro trends no longer dictate individual success. A detached home in Kitsilano might see fierce competition, while a concrete high-rise downtown or townhouse in East Vancouver operates under entirely different dynamics, complete with unique inventory levels and days on market metrics. Buyers and sellers can no longer rely on citywide headlines to guide their financial decisions. Instead, they must analyze street by street data, specifically property types, That's why asking whether Vancouver is in a buyer's market is almost impossible to answer accurately. The better question is, what exactly are you looking for? Let's start with downtown condos because this is where buyers have gained the most leverage. Across Metro Vancouver, apartment sales declined 7.2% year over year, and benchmark apartments prices are down nearly 8% from a year ago. That's a significant change from what buyers experienced only a few years ago. And if you're shopping for a condo downtown, Yaletown, Cole Harbour, parts of Olympic Village, you'll likely have more negotiating power today than at any point in recent memory. Buyers can compare units, they can negotiate on price, they can negotiate closing dates, they can negotiate on subjects, they can take the time to review strata docs thoroughly, they can actually make decisions instead of feeling pressured into them. That's a huge shift. At the same time, recent changes of short-term rental regulations and shifting tax structures have prompted many real estate investors to offload their secondary properties. The sudden surplus of motivated sellers effectively transformed the dense urban core into a playground for patient shoppers. For investors, first-time homebuyers, and downsizers, this creates opportunities that simply did not exist during the pandemic years and post-pandemic. But here's the mistake many buyers make. They assume because condos have become more favorable to buyers, every single segment of the Vancouver real estate must be experiencing the same thing. And that's where people get caught off guard. Now let's drive 5 minutes west, because this is where the story changes dramatically. Kitsilano remains one of Vancouver's most desirable neighborhoods. People aren't just buying homes in Kits. They're buying a lifestyle. They're buying access to the beaches. They're buying access to the restaurants. They're buying proximity to downtown while still maintaining a neighborhood feel. And those factors don't disappear simply because the overall market slows down. While downtown high-rises deal with surging inventory and a near 8% price drop, the story on the west side is completely reversed. For attached properties like townhouses and duplexes, Kitsilano remains one of the most resilient sellers markets in the entire city, with well-priced homes routinely finding buyers in under 2 weeks. Even in the detached segment, where overall west side inventory has grown, the classic character homes and modern builds here hold their ground firmly. Because of that, detached homes in Kitsilano continue attracting strong buyer interest, and especially when those homes are updated, renovated, or move-in ready. And what buyers often discover is that they enter the market expecting to negotiate aggressively because they've heard it's a buyer's market. Then they find their dream home in Kitsilano, and suddenly there's multiple showings, strong activity, competing interest, and sometimes multiple offers. That's because demand remains concentrated in Vancouver's most desirable neighborhoods. One of the strongest examples of this dynamic is Mount Pleasant. If you've been following the market for any length of time, you've probably noticed how desirable this area has become. Young professionals love it, families love it, investors love it, people relocating from other parts of Canada love it. And renovated character homes remain some of the most sought after properties in the city. Why? Because they are difficult to replicate. You can't simply build more 100-year-old character homes with modern renovations. They are unique assets. This absolute scarcity keeps Mount Pleasant's heritage segment entirely insulated from the inventory glut seen everywhere. While the overall city experiences a balanced to soft transition, the micro market for these turn-of-the-century properties operates under intense, hyper-local demand. Buyers are rarely just competing with other families. They are competing against a fixed geographic boundary where zoning for character retention means new supply is virtually non-existent. Consequently, when a beautiful restored Edwardian or Craftsman home hits the market near Main Street, it routinely commands multiple offers and swift closing timelines, completely defying the sluggish narrative of the broader regional economy. When supply is limited and demand remains steady, those homes continue performing well regardless of what broader market statistics suggest. This is where buyers often become frustrated because they hear the market is soft, the inventory is high, they hear buyers have leverage. Then they start shopping for renovated character homes in Mount Pleasant and discover quickly those properties are continuing to move relatively quickly. The reason is simple: the best properties always have their own market. Another area worth discussing is Cambie and Fairview and Main Street. These neighborhoods continue benefiting from several major advantages: transit access, Canada Line, Vancouver Hospital, walkability, new development, strong employment centers nearby. These are all factors that continue driving demand. This geographic resilience is further amplified by the massive ongoing multi-decade redevelopment of the Broadway corridor and Oak Ridge Park. These infrastructure mega projects are fundamentally reshaping Vancouver, transforming Cambie, Main, Fairview into premier transit-oriented hubs. Because of this massive injection of capital, concrete mid-rises and townhouses along these arterial routes remain incredibly steady based on the demand. You are seeing a consistent influx of medical professionals, tech workers, and downsizing seniors who are intentionally prioritizing long-term structural appreciation and unparalleled urban connectivity over the temporary fluctuations of regional interest rates. While buyers certainly have more options today than they did during the pandemic years, well-positioned properties in Cambie, Maine, Fairview continue attracting interest because they solve real lifestyle problems. People want convenience, people want shorter commutes, people want access to amenities, and neighborhoods that provide those benefits tend to remain resilient regardless of the broader market conditions. Now let's move east, because this is where we begin seeing a much different market environment. In areas like Killarney, Victoria, Fraserview, buyers generally have more negotiating power than they do in Kitts, Maine, or Mount Pleasant. There tends to be more inventory. Properties often spend longer on the market. Buyers can take their time, look at a property, go to the next, circle back to that other one, and negotiate. And in many cases, buyers can secure significantly better value compared to Vancouver's most competitive neighborhoods. Unlike the landlocked supply-starved pockets of Vancouver West, these expansive east side neighborhoods feature a much higher concentration of large, post-war detached lots and multifamily configurations. The absorption rate here sits firmly in a buyer's market territory, hovering near 11%, with single-family homes routinely averaging close to 40 days on market. This slower transactional pace is heavily influenced by a steady stream of newer construction and multiplex development that consistently replenish active inventory. Without the fierce emotional bidding wars to the west, sellers here are forced to be highly practical, frequently adjusting their expectations to align with reality. This doesn't mean these neighborhoods are bad markets. Far from it. In fact, many buyers find tremendous value here. Great schools, great parks. The point is that the experience is completely different. Buyers searching in Killarney may feel like they're operating in a buyer's market, and a buyer searching in Maine or Mount Pleasant may feel like they're operating in a seller's market, and both can be correct at the same time. If we zoom out even further and look in areas like Surrey, Langley, parts of Fraser Valley, the difference becomes even more noticeable. Buyers generally have more inventory to choose from, there's less urgency, and there's more opportunities to negotiate. And because affordability becomes a major challenge throughout Metro Vancouver, many buyers continue exploring these markets as alternatives. This geographical cushion has pushed total active inventory across the Fraser Valley above the 10,000 listing mark, plunging the region into an undeniable buyer's market with less than an 11% absorption rate. And this supply spike has forced a significant correction, with benchmark apartment prices sliding nearly 9% year over year and detached at 7%. While townhomes near transit remain somewhat balanced due to our raw affordability, the broader suburban landscape has transformed into a playground for patient shoppers. Sellers can no longer expect rapid-fire offers. Instead, they face average listing duration stretching well past 35 days. And for someone moving from Vancouver to Langley or Surrey, the experience can feel dramatically different. The leverage available to buyers is often much greater, and there's another reason why broad market headlines can be so misleading. The experience of buying real estate depends entirely on where you're looking. You're seeing a trend here. If you're a buyer, this market creates opportunities, but it also requires strategy. The biggest mistakes buyers can make is assuming every neighborhood offers the same leverage. If you're targeting downtown condos, you probably have room to negotiate. And you can safely embed protective clauses like financing approvals and meticulous home inspections backed into your contracts without the fear of immediate disqualification. Even subject to sale offers are acceptable here. However, your approach must remain nimble. To truly capitalize on this fragmentation, smart buyers should study micro trends over the past 30 to 60 days rather than the last year. Look at specific hyper-local metrics like the sales to active listing ratio for your exact property archetype, which will tell you precisely how much gravity you have during price negotiations. If you're targeting a renovated character home in Mount Pleasant again, you may need to move quickly. If you're shopping for Kitsilano, you might still face competition. If you're looking in Killarney, you might have some flexibility. The key is understanding the specific markets you're entering rather than relying on citywide averages. For sellers, the lesson is equally important. You can no longer rely on broad market momentum to sell your home. Pricing matters, presentation matters, and marketing matters. Who you hire matters, and understanding your competition matters. If your property is mispriced by even 2-3%, this market will penalize you with silence, and your listing will quickly grow stale as days on markets mount. And to win in this climate, your home needs to look like a model suite from day one. This might mean staging your home, painting, minor cosmetic repairs, and utilizing target marketing campaigns that place your property directly in front of active qualified buyers. If you're selling a downtown condo, buyers have options. If you're selling a unique detached home in a highly desirable neighborhood, your position may be much stronger, but you still have to be prepared. The sellers who succeed in today's market are the ones that understand exactly where their property fits in with the current inventory landscape. So let's go back to the original question. Is Vancouver a buyer's market? The answer is yes and no, because we know Vancouver isn't one market anymore. Downtown condos behaving differently than Kit's detached homes. Mount Pleasant is behaving differently than Killarney. Cambie is behaving differently than Surrey. Every neighborhood is telling its own story. And that's why the most important question of buyers and sellers should be asking in 2026 isn't whether Vancouver is in a buyer's market or a seller market. It's where do you want to buy? Just as important, what specific property type are you looking at? By shifting your focus from macro headlines to street by street realities, you escape the noise of a confusing regional narrative. Because once you answer that question, everything becomes much clearer. The competition you'll face, the leverage you'll have, the opportunities available, and ultimately whether this market works in your favor or against you. And if you need help navigating this market, please reach out. You know where to find me.